Is Arbor Realty stock the perfect dividend stock for retirement, or is this a dividend yield trap? With 13% dividend yield, there is no denying why people seem to like this stock. It could be a great way to boost your average dividend yield, hence why many people prefer to have a few stocks like ABR in their portfolio. And so do I. ABR is only 5% of my portfolio, but due to the high dividend yield, it makes up for around 21% of my dividends. But stocks like ABR come with a risk. The current payout ratio, according to Seeking Alpha, is indicating that dividends are not sustainable with 106%. And I can tell you that this number is diluting and not fully correct. But more on that in a minute. The first thing that I want to get out of the way is the fact that Arbor Realty Trust is a specialized real estate finance company. And this is very important. It is not a REIT but a finance company. Diving into the earnings they announced yesterday, we see a few interesting highlights. Net income was reported at $0.25, with distributable earnings at $0.45 per share. Dividends were declared at $0.43, so dividends are covered here, but by a very slim margin. So the 106% we saw earlier is not fully correct. It's a little under 100% at 91. And don't get me wrong, this could be still troublesome, but for now things are covered. Companies like ABR are heavily affected when the rates change. And what we see here is that down the line the EPS has heavily decreased year over year. So last year the dividends were covered really easy, and now there is some pressure on these dividends. Main reason is lower interest income, lower other revenue and higher expenses. And does this bother me? Yes, of course. And this should bother you too. So that's why we want to keep an eye on this number. Looking at the portfolio breakdown, we see that ABR heavily focuses on multifamily homes, with 87%, and that Florida, Georgia, and Texas combined make up for 50% of the asset locations. And now that we know a bit more about this company and the recent earnings, it is time to check the fundamentals of this stock. ABR is a 3 billion market cap company. PE ratio is at 8.6, which could indicate that they are undervalued right now. Historically, the PE ratio was pretty low, and lately it has been increasing, which is not a bad sign per se. Later in the video I will show you my 3 price targets for ABR stock, so make sure to watch until the end. Because PE ratio is only telling a small part of the story here, and these price targets might surprise you. Revenue is at 700 million, and in this graph we see that revenue went up in the long run. However, most recently the revenue is slowing down big time, and this has multiple causes. Over a longer period of time, margins are pretty steady, I would say. Especially the gross margin and operating margin have been increasing pretty nice and steady in the past. But ever since 2021 they have been decreasing. The net margin looks steady, but when we zoom in on the 5-year period, we see that it is actually decreasing. And it's the same with gross and operating margin. This is also massively affected by the rates, of course. EPS is following the same pattern as the margins and revenue. Keep an eye on this number as well. Analysts expect a big decline in EPS with minus 22% this year. This could, of course, massively impact the business. For the revenue, it is a pretty similar story, but the decline is a little smaller with 13%. And don't get me wrong, this could be a huge impact for the business as well. Current ratio is at 4.7, which is looking way too high in my opinion. So definitely keep an eye on this number. This could be a potential red flag. Diving into the debt, we see that right now ABR has 11.5 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABR has roughly 900 million in total cash, so they can't pay down a big chunk of their total debt, and this is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up and down in the long run. But in general, I would say it's going up. So this comforts me a little bit. Shares outstanding are increasing, which is not a good thing. But companies like ABR increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 13%, which is an insane number. And for many people, the main reason to own ABR stock. Annual payout is at $1.72 and payout ratio is at 91% and not the 106% displayed here. And don't get me wrong, this is still on the high side. The 5-year growth rate is at 10%, which is an insane number, on top of the already 13% dividend yield. And they increased the dividends for 10 years in a row, which is also very impressive. There is no deny that ABR is one of the best dividend payers in my portfolio. If you're interested in my other dividend paying stocks and how much dividend I receive every month, make sure to watch this clip right over here to see my full portfolio breakdown. And if you take a look at these numbers, the dividends paid since 2014, you see that ABR did increase the dividends at a decent rate overall. In this graph, we see the expected dividends in 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at a slightly lower growth number, which is still nice. And overall, these dividends look pretty good to me. But how about the historical returns? Was there any value in holding ABR in the past years? I decided to compare ABR stock with the overall market, in this case the S&P 500. On the 5-year chart we see that ABR underperforms the S&P 500 by a decent amount. In total, ABR returned 73% including dividends, versus the S&P 500 sitting at 98%. The interesting part here is that ABR was capable of crushing the S&P 500 a few times, but always went down only short after doing that. On the 1-year chart, it looks pretty different, with the S&P 500 returning 20%, while ABR is having a minus 8% return, so there's a big difference. On the 6-month chart, it is looking pretty interesting, with ABR beating the S&P 500, and at some point they were even crushing the S&P 500. On the 1-month chart, we see that ABR dropped massively in returns to a minus 8%, while the S&P 500 is also at a minus 3% return. So bottom line, the S&P 500 beats ABR in the both long and in the short run. But there were some interesting peaks throughout these periods for ABR. So, could this be the perfect time to buy ABR stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth, I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 46, 48 and 50%. And for the free cash flow margin, I'm putting in the same numbers. For the PE ratio and the price to free cash flow, I'm putting in 7, 8 and 9. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here with this company. Right now, ABR stock is around $13. I hit analyze, and we see a lot of green numbers. We have a low price target of $11, we have a mid price target of $14, and we have a high price target of $17. And to me, the mid to high price target is the most justified here, indicating that this stock is undervalued. So my final conclusion is that I love ABR. It is currently in my portfolio and the main reason being the dividend. Since it is a high risk, high return company in my opinion, I'm trying to keep them under 5% of my total investments within my portfolio. I really love the focus on multi-family homes, and they have some great times ahead in my opinion with that niche focus, especially when rates calm down a little bit. Most fundamentals look pretty good, and they are performing strong and steady in most cases. However, I do think in the coming years the growth will slow down a little bit. Dividends also look really good with 13% dividend yield and 91% payout ratio. On top of that, they keep increasing the dividend yield. When things calm down, the payout ratio will also come down. From a valuation point of view, things also look really good. So for now, I'm feeling comfortable about owning ABR. And make sure to watch my next video about my full portfolio breakdown to learn more about my choices and how much dividend I receive. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.